Welcome to the Deep Dive, your shortcut through the noise to get straight to the insights from the latest earnings calls. Today, we're diving into Telenor's Q2 results. And management sounds pretty happy, even talking about basking in additional sunshine.
Yeah, you definitely get that feeling. It was a strong quarter, no doubt about it, especially in their home turf, the Nordics.
Right. So our mission today is to unpack those key numbers, look at the strategy in the Nordics and Asia, and figure out what it all means for Telenor and maybe the wider telco world.
Exactly. We'll pull out the important bits from their call, help you get a handle on what's driving things and what might be next.
Okay, so let's jump right into the results then. Because the overall performance, like you said, was genuinely strong. Group service revenue hit 16.5 billion NOK.
Which is up, 2.9% year on year? Solid. But the real story, I think, is the operational leverage.
Yes, exactly. Their adjusted EBITDA. That's the core operational profit measure.
Right, before all the financing stuff and depreciation.
It jumped 8% year over year, 9.3 billion NOK. That shows some serious efficiency gains coming through.
Absolutely, that's a big number.
And that strength, it really trickled down, didn't it? Adjusted EPS, earnings per share.
Yeah, what goes to the shareholders?
Up a huge 33% from last year, 2.22 NOK. I mean, for a big telco like Telenor, that kind of jump is pretty remarkable.
It really is. You don't see that every day. And free cash flow looked decent too. Before M&A, 1.6 billion NOK for the quarter.
Okay, solid cash generation.
Yeah.
And CapEx, how much are they reinvesting?
They kept it disciplined. The CapEx to sales ratio was 13.5%. That's actually down almost 2 percentage points from last year. So getting more efficient with their spending there too.
Makes sense. And leverage, debt levels.
Ended the quarter at 2.4 times net debt to EBITDA. A little bit higher maybe, but they mentioned the dividend timing and some currency effects, the euro strengthening.
Okay, so manageable.
Mm-hmm.
But where did all this strength really come from? Which part of the business was the real engine this quarter?
Oh, no question. It was the Nordics. And specifically Norway. That was the absolute star.
Norway. How good was it?
Get this. Adjusted EBITDA growth in Norway was 16.1%. 16%. They said they haven't seen anything like that for over a decade.
Wow. Okay. For a mature market like Norway, that's exceptional.
It really is. And that pulled the whole Nordic region up to 12.5% EBITDA growth. So Norway was definitely the powerhouse.
So what drove that? What were the catalysts behind that kind of growth across the Nordics? Was it just signing up more customers?
It was a mix of things, really. Nordic service revenue overall bounced back nicely, up 3.7%. Mobile was strong, up 5.6%. And yeah, they did see good subscriber trends in Sweden, Denmark, and Finland.
There must have been specific triggers for Norway's big jump.
Definitely. They mentioned implementing some price changes on existing customer plans, the back book, earlier than usual. That gave a quick boost.
Okay, that makes sense. And what about that roaming deal with ICE? I remember that being talked about.
Yes, the ICE agreement, that played a big part too. They had the full quarter impact, and it seems traffic volumes were way higher than they expected.
Higher. How much higher?
Enough that they're now saying that deal should bring in over 500 million NOK in roaming revenue in 2025. That's a lot more than they initially thought.
500 million NOK, just from that one deal. Wow.
Yeah, it's like found money almost, leveraging their existing network in a very profitable way. A real upside surprise.
That's huge. And beyond that, their transformation program seems to be working too, right? They talk about driving efficiencies.
Absolutely. Those radical improvement efforts, as they call them. It's about customer experience, but also cutting operating costs, the OPEX.
Right. OPEX down 1.6% in the Nordics, and even more in Norway, down 3.8%.
Mm-hmm.
How important is that cost discipline?
It's fundamental. This isn't just a one-off thing. They've been working on this for years. It frees up cash to invest, improves margins. It's core to their whole strategy.
Speaking of investment, they're really pushing fiber in the Nordics now. Big move in Norway, buying GlobalConnect's consumer fiber business.
Yeah, for 6 billion NOK, that adds about 140,000 fiber customers. It bumps their market share up quite a bit, from 22% to 29%.
So strengthening their infrastructure position significantly.
Exactly. They want to be the leading digital infrastructure player. And importantly, they stress that their network is open, wholesale access. So this deal actually expands that open network reach. More scale, more efficiency.
And it's not just Norway, right? Finland too.
Right. They're planning to upgrade all of DNA's housing associations there to full fiber by 2028. It's a big commitment.
How big?
About 120 million euros in extra fiber investment over the next few years, starting later this year. It shows they're serious about owning that high-speed fixed infrastructure across the Nordics. It's a clear strategic bet.
Okay, let's touch on competition. Sweden, they acknowledged, is still tough. Aggressive pricing from others.
Yeah, Sweden's tricky. They're actually letting some unprofitable fixed-line revenue go, deliberately focusing on mobile, where they saw good growth. Gross profit in Sweden was still up 4%, so they're managing it carefully, prioritizing value, not just volume.
And Norway. Is the competition heating up there after those price rises?
Apparently not. They said the competitive scene is stable. Churn, customers leaving, has settled down after the price changes, and they're doing well attracting new customers. So, stable for now.
Okay, let's pivot then. Asia. Always a mixed bag, often challenging. How did things look there?
Well, they managed to grow profitability in local currencies, which is good considering the headwinds. But yeah, the reported numbers, the nominal figures in NOK were down because of currency movements.
Which currencies were the main drag?
Mostly the Pakistani Rupee and the Bangladeshi Taka weakening against the Norwegian krone. So underlying operations are holding up, maybe even improving slightly organically, but the FX masks that a bit in the group results.
Right. What about Thailand? TrueCore. Any positive signs there?
Actually, yes. Decent performance. Management highlighted that True hit positive net profit for the first time since the big merger. That's a significant milestone.
First profit post-merger. That is big.
Yeah, and they think there's still lots of room for growth and more efficiencies. Plus, the recent spectrum auction went okay, which helps solidify a more, let's say, rational market structure.
Any hint of shareholder returns?
Yes, they said True's management plans to recommend a dividend later this year. That's a strong signal of confidence.
Good news there. What about Malaysia? Celcom-Digi. Still focused on cost cutting.
Pretty much. Driving synergies from that merger is key. But they're also dealing with top-line pressure. That unique 5G situation in Malaysia doesn't make things easy.
Remind us, what's the deal there again?
The government built a single national wholesale 5G network, DNB. All the operators use it. So you've got intense competition, everyone fighting for customers on the same infrastructure. Harder to stand out.
Tough environment, but they're still managing.
Seems so. They've kept a steady dividend flowing to shareholders, Telenor included, and they say they're on track with integrating the networks and finding those cost savings. So, delivering despite the challenges.
Okay, briefly, Bangladesh and Pakistan.
Bangladesh Grameenphone executed okay against a tough comparison from last year, but any real market recovery there looks more like a 2026 story post-election rather than happening sooner.
And Pakistan. Operationally strong, but tax issues.
Yeah, operationally, Telenor Pakistan is doing surprisingly well. ARPU up 18%, EBITDA up 28% locally, helped by data pricing and lower energy costs. But, the authorities are aggressively chasing some old disputed tax claims.
How aggressive?
Aggressive enough that it hit their cash flow by nearly $250 million NOK this quarter alone. So a significant headache, highlighting those regulatory risks.
And the sale of Telenor Pakistan to PTCL. Still happening.
The deal itself is firm, yes. Should create a stronger player. But, and it's a big but, it's stuck waiting for regulatory clearance.
What's the holdup?
Seems like competition authority approval is the main hurdle. The telecom regulator actually supports it, but the delay is tricky, potentially slowing down 5G investment and digital progress in Pakistan. They hope to close in the second half of 2025. It really shows you the complexity of operating in some of these Asian markets. So many factors beyond just selling phone plans.
Definitely. Okay, let's pull back to the group financials. Adjusted EBITDA, 9.3 billion NOK. Nordics the main driver, but Asia contributed positively overall.
Right. And they also booked a nice gain over $500 million NOK from their Johto cloud storage joint venture this quarter.
What about cash flow for the group? We mentioned 1.6 billion before M&A in Q2.
Yeah.
Any specific drags this quarter?
Yeah, a few things hit Q2 specifically. Interest payments tend to be higher seasonally. Income tax payments were up, partly because of that Pakistan tax issue we mentioned. And CapEx was 2.8 billion.
Okay. And working capital.
Took a bit of a hit too, partly due to paying out on a Norwegian TV VAT case and just the usual swings in tax cycles. These things happen, mostly expected.
So balance sheet's still looking okay despite these movements. Net debt at 90 billion NOK. Leverage at 2.4 times.
Yeah, it's solid. They expect leverage to come back down into their target range during 2025. They were very clear. Driving return on capital is the absolute top priority.
ROCE, return on capital employed, what was that number again?
8.8% for the group over the last year. But if you strip out the Asian associates, it's actually 13.2%. That's a very healthy return, especially for this sector. Shows the core Nordic business is really performing efficiently.
And that focus comes from their strategy, right? The more for more, cost discipline, smart M&A.
Exactly. It all ties together.
And based on this strong first half, they've updated their outlook for 2025.
They have boosted the EBITDA outlook, now expecting high single-digit growth for the Nordics and mid-single-digit for the group overall. That reflects the Q1 and Q2 strength.
What about CapEx? Are they spending more with these fiber plans?
They kept the formal guidance around 14% of sales for the Nordics, but they did flag a likely upside rounding in the second half. Basically, yeah, expect spending to tick up a bit due to the new fiber investments in Finland and also some network resilient spending in Norway. Investing for the future.
And free cash flow for the full year.
Still guiding for around 13 billion NOK before M&A, which crucially fully covers their planned dividend payments.
And how much of that cash flow comes from Asia?
They expect about a third of it from Asia, including that Q4 dividend they hope to get from True in Thailand. So Asia remains an important cash contributor, despite the other challenges.
Okay. But management also sounded a note of caution, didn't they? About Q2's growth rate not being sustainable every quarter.
Right. They were pleased, obviously, but realistic. They said don't assume this exceptional EBITDA growth is the new normal every single quarter. They expect higher spending on things like sales, marketing, and network resilience in the second half.
So that'll probably slow down the rate of OpEx reduction for the full year compared to H1.
Exactly. Managing expectations, acknowledging they need to invest for the long term, it's prudent.
So bringing it all together, what's the so what for you, our listener? Telenor's quarter really shows strong operations and some smart strategic moves, especially considering the messy global environment.
Absolutely. That double-digit EBITDA growth in the Nordics, the 33% jump in adjusted EPS, you just don't see many big established telcos delivering that kind of performance right now.
It says a lot about how they're running the business.
It does. And that focus on ROCE, return on capital, seems genuine. It's driven by that strategy, the cost-cutting, the targeted M&A, like the fiber deals. They're playing a focus game.
Looking ahead, those investments in fiber and network resilience seem key, particularly in the Nordics. They want to cement their leadership.
And crucially, that comment supporting market consolidation in the Nordics, going from 4 operators down to 3, that's a big strategic signal. They believe it's needed to fund the necessary network investments.
So clear priorities in the Nordics. Meanwhile, Asia? Well, it's being managed.
Yeah, the challenges are real, but they seem focused on efficiency and getting cash out where they can, like dividends from True and CelcomDigi. It's a balancing act, optimize Asia, invest heavily in the Nordic core.
Right. Okay, now for something a bit different, our segment called This Is Not Financial Advice, purely for entertainment, throwing out a wild, maybe plausible trade idea based on today's discussion.
Oh, let's hear it.
So, given that stellar Nordic performance, the big fiber push, and that explicit nod towards consolidation, here's the idea.
Okay.
Go long Telenor, maybe via call options. Betting on a major re-rating. Seeing it become a sort of Nordic pure-play infrastructure powerhouse.
Interesting. So the thesis is the market isn't fully valuing the fiber strategy and the potential consolidation upside yet.
Exactly. We think the market sees the fiber expansion in Norway and Finland, plus maybe more consolidation, as creating way more long-term value than is currently priced in.
And the current higher leverage.
We'd argue that's temporary. As they bring leverage back down, maybe sell off some more non-core Asian bits, perhaps even to fund a bigger Nordic consolidation move.
Then the sum of the parts value could be much higher. Makes sense.
You still got the dividends flowing from places like Thailand and Malaysia as a base. But the real growth story, the re-rating trigger, is that Nordic transformation. Betting the market starts valuing it like a focused infrastructure-heavy growth company, not just a sprawling old telco.
It's a bet on a perception shift. And you've got some potential kickers too, right? The clearer picture in Thailand, maybe deregulation for fiber in Norway, that ICE roaming bonus, stuff the market might not have fully baked in.
Precisely. It's really a bet on management executing that 4-to-3 consolidation principle in the Nordics, which they believe unlocks huge value. It's bold, relies on a lot going right, but it's based on what they're saying and doing.
It's definitely a thought provoker.
So there you have it. We've unpacked Telenor's Q2. Outstanding results in the Nordics, strong financial discipline, big bets on future-proof infrastructure.
And despite those persistent headwinds in Asia, they've put forward a pretty compelling story of growth and efficiency. Really quite impressive performance compared to many global peers.
It feels like Telenor isn't just reacting to the market, but actively trying to shape it, especially in those core Nordic countries. The big question for you then is, how fast can these fiber investments and the push for consolidation unlock that next level of value? Is this really a new chapter for telcos, or just Telenor catching some welcome sunshine for a bit?
And remember, none of this was financial advice.
Thanks for tuning into the deep dive. Keep digging. Keep learning.